Hey guys, what's up and welcome to a new Tesla update video. So today, as usual, let's go over the market, let's go over Tesla, and let's figure out what has happened so far and what we can expect moving forward. So with that being said, if you enjoy the video, guys, please don't forget to hit that like button. It does help a lot. This is not financial advice. I am not a financial advisor. My membership section on YouTube is live. Of course, the link is down below if you're interested, where I post intraday thoughts on Tesla and just overall kind of market sentiment as well throughout the day as it moves. Pretty much live, giving updates on Tesla live as it's happening and my thoughts. So if you're interested, link is below. But all that being said, let's jump into it. Tesla looking like it'll be closing the day in just about a minute, down about 3.2% or so, 3.25% ish on the day, which will be putting it at about $255.50 per share, which compared to the market, QQQ only down 0.2%, SPY only down 0.6%. So Tesla definitely an underperformance throughout the whole day. Pretty much exactly what we talked about just yesterday and pretty much all this week, really. We talked about the 21 EMA, right, being probably the most important factor right now to really pay attention to. And so far, we have been not only falling below it ever since earnings, but we've pretty much been getting rejected by it ever since. The RSI and on the daily is still looking not great. And there's a lot of factors here that, in my opinion, I still view Tesla as being overall a little bit weak here, right? I don't expect anything to happen too crazy. I don't expect a massive rally to the upside. Like I said, 275 was my target. We went to 273, which is pretty close. And like I said, also, if today Tesla, if today Tesla can close above the 267-ish level and also the 21 EMA, which is also just over $267 per share, that would be great. And today would be the day I would ideally, tomorrow like the latest, but like today would have been the ideal day to have that happen, right? And we did open above it, right? We were actually above it for a little bit and then we just collapsed right back under. And the reason I say that is because I usually have like a kind of 2-3-ish day rule where if something breaks, I want to see consistency beyond that, right? Because there's a lot of false breakouts and breakdowns, etc., in the market. So as an example here, right, we went above it actually for a little bit, had a bit of a close, and then we finally went back below it, and now we saw several day closures below it and showing consistent weakness below that 21 EMA, which is further solidifying the fact that, yeah, you know what, maybe we're not ready to go back above just yet, and maybe we will consolidate at this level, or of course potentially fall even lower. Again, that kind of, the more consistent it happens, and the more times you keep rejecting at it like this, kind of more believable, I guess it becomes, if that makes sense, right? So that's number one, right? The 21 EMA, of course, consistent rejection. We fell below 262, which isn't great. And we're now closing candles at the levels that we were pretty much at just a couple days after earnings. But instead, this time, we're pretty much closing at the lows of the day on somewhat low volume. Honestly, the volume isn't too crazy. It's not like ridiculously low, but it's absolutely not high at all. It's definitely on the lower end as well. So take that as you will. That could be a little bit of a bear trap potentially smelling up. But with that being said, just the way it's looking, I personally don't think that there is a whole lot of things to be really short-term bullish on Tesla here, just strictly through technical analysis. Of course, TSLA specifically, and not Tesla, the company, right? The two are often not correlated to each other, especially short-term. But with that being said, right, the way it's looking, it does not look like there's a lot of strength there, right? It looks like it does want to go a little bit lower, right? If we lose 250, I do believe that kind of, 243 to 240 is absolutely next, pretty much unquestionably. And unfortunately, if we bring up the volume by price, take away the 21 EMA, you guys get the point on that one, right? And of course, if we lose this kind of low 240s level, that's when I personally think that, 220s to 210s is going to be most likely in play as well. Potentially gap fill and then bounce from there. There is still this gap fill that's still there. So there is technically a possibility we just gap fill this and just bounce right away. The only reason I'm not sure about it is because the volume here is just so abysmally low. You can see on the right over here, there's essentially no trading volume at this level of this gap, right? Just as we pretty much sliced right through this level and then started consolidating around this higher volume area. Same concept applies on the way down. If we come down below 240s and we start breaking this final like volume kind of, density, if you will, that we have over here, again, around that 240 area, that is when this extremely low volume really starts to kick in and you just kind of slice right through it to the downside just as we did to the upside. So keep that in mind, right? There is technically a possibility we do get a bounce off of this gap fill because a lot of people are probably eyeballing this gap fill. People will most likely start buying at this gap fill, et cetera, et cetera, et cetera. But there is that, on the contrary, that extremely low volume. So it's honestly, at this point, in my opinion, anyone's guess as to what happens at that gap fill, assuming we, of course, get there. But with that being said, right, I do believe that there is still more weakness in store for Tesla and the markets in general, but Tesla specifically. I do believe that we will most likely come down to the low 240s. And there is actually, believe it or not, like I said before, there is a potential. I don't think it's a high potential, but there absolutely is a potential that is the bottom, right? That 240-ish area will be the bottom. Because again, as usual, take that Fibonacci, swing low, swing high, and you can see the 382 level is $243. Obviously, my Fibonacci is not drawn to absolute perfection to the decimal, but to give you a rough idea, the low 240s, right? You can see is the 382 level. So there is technically a possibility that that is the bottom. I personally don't give it too much percentage. I think it's like maybe 30% at best. Like, I don't think it's very high. I'm pretty convinced that we will see the 220s, maybe even 210s. Like, I feel pretty confident about that. And again, that doesn't mean it'll happen tomorrow. It doesn't even mean it'll happen next week. Might not even be next month. I personally think it'll happen probably either in August or September. I think in one of those 2 months, we will revisit the 220s, maybe even the 210s, but 220s is where I personally will start, more aggressively buying, assuming we get there. And then I'll leave a little bit of dry powder again, of course, assuming we go to 210s, but 220s is my personal target. Like, that's where I am eyeballing it. That's where I am kind of, trying to be patient, slowly nibbling on these dips, of course, but, saving the majority of the purchasing power in that kind of 220s-ish area, right? That's just my opinion, of course. So, keep that in mind. I take that as you will. I could be completely wrong, of course. You never really know with Tesla in the market sometimes. But again, that's the 0.5 level, which is the level I personally like. And of course, 208, which is, pretty much 210, is a 618 level, which is also a very real possibility. But with just the way it's overall looking, the RSI is still looking bad, still looking bearish, pointing straight down, making lower lows. It's just looking quite hideous. The MACD is still looking pretty damn bad. Not really looking bullish at all, making larger red candles, or bars, I guess, or whatever you want to call them down here, right? They're getting larger and larger. There's nothing really to say that looks bullish here. Now, the one thing that does potentially, give the bulls a little bit of, hopium, I guess, if you will, copium, hopium, whatever, is this 50-day moving average. This 50-day moving average is not too far below us. It is sitting at pretty much that level I just talked about that has the potential to be the bottom, which of course is that low 240s, right? So sitting around $243-ish per share right now. Absolutely real possibility that that does become the bottom, which is where I personally most likely will be also continuing to buy the dip. At the moment, I'm not buying anything. I'm just being patient. Once it gets to this 50-day moving average and low 240s, I most likely will nibble a little bit there. And again, of course, save a lot more powder in case we do fall below it, because again, below it, keep in mind, we do have the 100-day moving average, which I believe is right here, which is sitting at, again, by the time we get there, assuming this also takes another month at least, this thing will slowly keep catching up to us, right? And by the time it starts catching up to us, and let's say the actual move and the bottom is in, let's say end of August, early September, something like that. So pretty much just over a month from now, right? Again, keep in mind this 100-day moving average, assuming we kind of consolidate but slowly move down, will continue moving up to meet us, right? Slowly but surely. And I do believe that by the time that does happen, it'll probably be somewhere in the high 210s, maybe low, low 220s. And I do believe that that should be a pretty nice area to also potentially bounce on as well. But with that being said, that's kind of the main stuff I am personally looking at right now. So keep that in mind, ladies and gentlemen. We talked about the seasonality many times. August is a pretty neutral month, slightly more in favor of the bullish side, but not by a whole lot. Kind of a coin flip month. However, with that being said, again, September, October, pretty damn bearish looking months, not just for Tesla, but the market in general. I think I showed you guys Apple as well. And Apple in September is sitting on an astonishing 31% chance of being green, essentially. But obviously the opposite, 69% being red, right? So keep that in mind. Very bad month for Apple as well, and really just the market in general. You can see over here, even SPY not looking phenomenal. September also the lowest month. Just September has historically, and I've learned this lesson the hard way like 2-3 years ago or something like that. September is an atrocious month for the market. Just be extremely cautious. Now, another thing I want to pay attention to as well, very quickly on Tesla, is of course going to be what was it, 65-minute chart, right? So we'll jump in the 65-minute chart as well quickly. You can see not looking phenomenal here. The RSI kind of looking okay. Honestly, it is making lower lows here, but the RSI is actually making higher lows slightly. So the 1 hour is not looking too bad, which is why I wouldn't be surprised if we kind of maybe visit the 240s just briefly or something like that. Maybe get low 240s. RSI might look still pretty damn good, and then from there we get a bounce. But it of course will have to come to it. But as of right now, no reason to rush into it. I personally don't think Tesla's going anywhere. I don't think it's going to skyrocket anytime soon. I do think it's going to take a few months of consolidation, some correction, some new buyers stepping in as we kind of get down to these levels, and then I think we'll form a base, consolidate sideways, and I think late September, October-ish is where that base will form, and then kind of late October into November is when I think we'll start making that next leg up for our November and December. That's the way I personally view it right now. That's just kind of in my head. That's the way I'm kind of envisioning it right now. Now, another thing I want to pay attention to very quickly that I share with my subscribers, of course, is going to be this. This is a post from someone I follow on Twitter. He usually posts very nice stuff. He has a private account, so you can't actually follow him. But nonetheless, he is posting a really nice chart here, pretty much talking about how historically from July to October, the VIX, the volatility index, which, by the way, is up about almost 12% here, getting a nice little bounce. But nonetheless, right, it rises from the low 10s to the high 20s. You can see in the top right here, I'm reading, and has held true for the last 30 years. Historically, volume shows in the midsummer. Senior fund managers are on holiday. The earnings season is thus followed. It's an overall quieter period. Then in August, which is literally around the corner, the action begins again in earnest. And by September, we're back above 20 in the VIX, which also combines very well with what we just discussed about how historically the market, not just Tesla, but Tesla, the market, Apple, just everything for the most part, is usually seeing September as the weakest month of the year. That's exactly what he's talking about as well, which in turn also means a strong month, or just period, if you will, for the VIX. So keep that in mind. Thought I'd mention that. Pretty important information. So take it as you will. Again, do with that information as you see fit. But I have my own game plan. I know what I'm doing, and hopefully you do as well. But thank you all so much for watching. If you enjoyed the video, don't forget to hit that like button. I'll see you next time. Peace.